All right, what's up, Zach? Super excited for today's video. We're going to be breaking down ticker symbol MRVL. This is Marvell Technology. This one was a viewer request, and I do viewer requests every single week. So, if you want to see your stock in the next video, make sure to comment below on what tickers you're looking at. Okay. So we're going to start off on the 3-year weekly chart. Okay, just so we can get a better sense of the overall long-term trend. Okay. Now, to me, what I see happening and forming is a very big head and shoulders pattern. Okay. And now it's not fully formed yet, but I'm watching it to see if the pattern is going to form. We do have a left shoulder, we do have a head. And if we get a bounce, okay, and we start to rally upwards in this direction towards $50, 55 in that area, that would give us our right shoulder. Okay. And if we see a rejection here around 60, 65, from anywhere from about 56 up to 60, we get a rejection there and we fall down lower, it's going to finish forming this head and shoulders pattern. Okay. So that's the first thing that I'm watching out for. But that's not telling you guys, you have to panic and sell everything right now. Okay. If you're looking for swing trade opportunities, or even intraday trade opportunities, scalp opportunities, there's plenty of opportunities, even with a stock like Marvel. Okay. So, we see this possible pattern that I'm looking at, and I'm going to watch to see if this develops over the next few weeks and months. All right. Again, looking at the weekly chart. All right. This is our volume profile. All right. And this is where we see volume by price. Okay. So we can see where actually there's lots of volume, whether it's buyers or sellers at these price levels, versus the volume by time. Okay. These blue lines is volume by time. All right, all of these volume by time, and then this again, volume by price. Okay, so that's the main thing we're going to look at right now. And I'm going to show you guys some pretty important stuff. Okay, so what we're noticing is that we're in a very high volume node right now. Okay, if we look at the previous price levels and everything above it there's much less volume. Okay, so that gives us a good idea. All right, that essentially between $50 and $42, right around where we found support. Okay, 42 to 52 or to $50 is our high volume node. Okay, and what happens is we tend to move from high volume node to high volume node. All right, so meaning we could head lower, okay, down to this area at about 37, down to 35 to 37 is going to be our next area that we're going to look for buyers or sellers, for a big move in the market. We're going to see, all right, can buyers push this up and fill this nice gap up here on the weekly chart? Because these gaps tend to fill about 90 to 95% of the time historically. It's just a matter of when. Okay, so you have to get the when part really right. You don't want to try to fill all these bullish gaps up when it's in a bear market. You may have to wait for the next market rotation, or we could get a nice short-term rotation, okay, over the next week, 2 weeks, or a month that could fill that gap up. All right. So it's really up to you to watch it and maintain. But the reason that we're finding some nice support in this area is because, again, this is our high volume node. And we look here previously on the chart. Okay, we have a nice W pattern at these price levels. Okay, we have the nice down double bottom W pattern. Okay, so I'm expecting, there's a possibility we may see something like that similar. Okay, we know this is a high volume node. We know that there's lots of activity and volume in this area, and we may see it bounce up and down. Okay, and if we come back down, find support, that could be a potential another W pattern that we had in the past. And if we get that, that would bring us up, fill this gap area, come up to that 55 level, to 60 level that I was talking about, where if we get rejected there, I'm going to look to see if we play the head and shoulders pattern. All right, so that's the weekly right here. We'll zoom in a little bit more to the daily chart now. Okay, and I'll pull up my daily chart drawings, and we'll go ahead and take this volume profile off of here. Just really wanted to show you the volume profile on the macro side. Okay, now we're going to go in a little bit closer and zoom in on the chart. What I want to show you guys and highlight to y'all, okay, is the gaps. All right, so here's an example of a huge gap that filled. Okay, so we have a gap from this candlestick to this candlestick up here. All right, and eventually over time, that happened. Let's see what the date is here. This was in November. Okay, and later in January we ended up filling the gap, so it took about 2 months. All right, we have a very small gap up currently to fill, right around 68. We have another small gap up to about 56, another small gap up to 52, and an even smaller gap up here to about 45. Okay, so there is a chance that these gaps may fill. but it may not be anytime soon. And, we may need some type of catalyst or, just something because we're really in a bear market. Okay. The NASDAQ and the S&P 500 officially hit bear market territory. And that changes the whole, landscape, right? Especially for some of these other companies like Marvell, right? It's going to change the landscape and investing, dynamic surrounding it. Okay. Now, I will show you guys that we do have some bullish divergence setting up on the daily chart. Okay. So that's when indicated by these ovals here. Okay. So we have a low and we're creating a lower low. Okay. Creating lower lows. But on the RSI at this point, we're actually hit our lowest low and we're creating higher lows. All right. Now we are starting to break that trend line a little bit. So, what may happen is we may dip below. Okay. And come back somewhere around here, get rejected and head further. Okay. But if we just dip below, then it could be just a little bit of a fake out, right? We come down here, find support, break back above, and turn this back into support and keep rallying. Okay. So, there is a little bit of sign that we may have a nice pop for a day trade or a swing trade. If you can catch, the bounce off of this trend line, we can look here. We had the low, the higher low at this date. All right. And let's look at the upward momentum. That was a night 13% rally in 6 days. Okay. So that's what I mean by there's always opportunities, right? And if we want to look for an opportunity, one of the opportunities that I'm eyeballing is that there's some bullish divergence on the daily chart. And you may be able to spot that, come in, find it bounce, find support off of that trend line and be able to ride that momentum either for a quick day trade or possibly a swing trade, as I said. All right, now we'll zoom in a little bit more even, and we'll go down to the 1 hour chart, and I'll kind of give you guys a better visual and example of this whole process that I'm talking about of swing trade opportunities, day trade opportunities, things like that. Okay, so if you're looking on the 1 hour chart, right, you can find bullish divergence as well. Okay, so here's our low. All right, so look at us, we're creating lows and we're bottoming it out on the RSI. We're at like $9 or not $9, but we're at 9 on the RSI, 13 on the RSI at these levels, right? Well, look what happens here. These 2 days when we drop even lower. Okay, we drop lower, we create that initial higher low, and it bounces a little bit pre-market, or I'm sorry, post-market, and we open up higher, right? So if you see this and you bought a swing trade, right, at the end of the day towards market close on this day, and you sold at open, right, you would have been able to take some nice profits. All right, so let's see here from here to here. That's a 3% trade overnight, right? And you sell at open because you know that the overall trend is down, right? So you never really want to fight the long-term macro trends. But if you're looking to, again, swing trade or day trade, these are some opportunities, right? So you're seeing bullish divergence on the daily time frame. You're coming down to lower time frames on the 1 hour chart, and you're seeing, man, we're making significantly lower lows, but we're making significantly higher lows on the RSI, right? So you could have bought there, sold at open, right? And that's what I imagine a lot of people did. We took that profit and then we came down and we're creating even stronger bullish divergence. Okay. Because again, here's that low. And now our higher low here is all the way up to 30. Right. And what do we get from there? We get another possible day trade or swing trade opportunity. You could have day traded here, sold at close for 4.5%, right? Or you could have swung it through the next day, okay? And we opened strong at 8.9%. That's what mostly these bullish divergences on the smaller time frames is going to give you, right? Is you're going to see a short pop, right? And it won't last too long. Okay. So 1 hour bullish divergence, you may see it happen in pre-market and after hours. You may see a nice little pop, or you may see a strong pop at open just for it to sell off. Okay. Because the macro long-term trend is a downtrend, but we're seeing on smaller time frames that we can spot and see, all right, well, even though we keep dropping lower, the relative strength is increasing. This is a sign that we may have a small pop in the near term future, right? And again, that's the things that we're looking at. All right, look here, we have lows, lower low, we have lows, higher low, and you can catch the opportunity 2.43%. And if you trade options, right, 2% on options can be anywhere from 5 to 10 to 15 to 20%, on your option trades, just depending on what expiration date you choose and your exact entry, right? So that's basically it. That's what I wanted to break down Marvel for you guys. I would be a little bit cautious long term, but short term, there are some nice trading opportunities.